Hi everyone. Today is March 18th, middle of the March, very important phase. You might say every week is important. You're not wrong when you say that because every week there is something, whether we like it or not, there is always something, and we have to deal with it. So yes, we are going through challenging time, but from price action point of view, it's positive in general. Why? Simple reason being, the low was 15K for Bitcoin, and now it is sitting on 27K. So it depends on how one would plan. It all boils down to that. If a trader is able to plan well, understand the trend, understand the key levels, then it's not that tough. So challenge is when someone tries to leverage, when someone tries to judge the market each and every day, when someone tries to squeeze profit every other day, then I don't think that person would feel comfort. But if you zoom out and see what is really happening on a weekly time frame, even if you don't go on a weekly time frame, look at the 3 day time frame that I recommend, because 1 day and 1 week in between, 3 day gives us good snapshot. In my experience, of course, it's not a kind of a universal rule, but my experience, that 3 day gives a good view. um, so 12 hours gives you uh, intraday. So 12 hours, we I always refer as a ta, I have to, I don't go below 12 hours unless it's very critical near a support or something to understand the behavior. Otherwise, I would prefer 12 hours to see what is really happening, and then try to focus more on 3 day. Weekly, we have to track it weekly for a different reason, because many bots are programmed at 1 day and 3 day. Sorry, 1 day and 1 week and 1 month. So there are some cycles or routines that are, or rules assigned at those levels. That's why those time frames matter. So that's why importance of weekly close, daily close, monthly close matter. you know uh Not all the times, but usually that's the case, because those are sometimes aligned with many other economical factors. Some reports might be coming out weekly, some reports might be coming out monthly. We get quarterly results, not necessarily on the end of the quarter exact date, but that's how that's how different cycles are aligned. So that's why there's importance to standard 1 day, 1 week, and 1 month time frame. Otherwise, it's just, this is a continuous flow of river. I think this water, I mean, this is like a river, continuous flow of water. There is no demarcation. This is, but just because some bots are programmed for this time frames, they matter. And you must have observed that they react when the day changes, you know and or maybe when the futures market or future contract closes, then it reacts. So there are some dependencies where you see major changes. And of course, any event like the upcoming event next week, a big event, Fed, right? Decision on rate hike. So that is a big deal, a big deal. And I think we'll have to wait and watch how it goes this weekend. And I think on Monday we'll see. But I think the market will wait for Fed's decision. In my opinion, if I talk about economic economic fundamental, macroeconomic fundamental point of view, I don't think anyone would try to take big position before this meeting. Yeah, price would move here and there, but I don't think anyone would commit long term unless they see what comes out in next week's meeting. So that's my understanding. So what we'll do, we'll start with technical as usual. I open 12 hours, then we'll zoom out go one day. We'll also look at 1 week. This time we are going to do something different. Some of you have not seen my M2 indicator or a prism indicator, so I'm going to mix together. Now there are two indicators being of uh, I don't do marketing, but sometimes I try to showcase that what they do and how they can beneficial, or what value they offer, and both are complementary in nature. And you will see that the M2 provides indications, I would say indicates the trend up or down for the selected time frame, and user has to select the right time frame based on the guidelines that I share. And use of prism is to understand the strength of that trend. Whether so if I give an analogy, that if the person is running, you see the person is running, if you compare that with uptrend, but if you know that whether the person is exhausted or not, how would you know that? And that's what prism offers. So M2 provides that the person is running means the uptrend is uptrend is going on. However, the prism indicates that if the person is getting tired or not. So the early indication it gives on the trend health or strength, and whether it's up or down. And that's the benefit of prism indicator. So these two indicators combined gives a really strong informative analytics in a way that one could plan around it. um, and so I'm going to include both these indicators into this session for at least some of the. What we can do is I'll ask you for the coin and I'll open indicator so it doesn't look like that I prepared for something. What we'll do is we'll go through the usual analysis, and then open the indicator. I request you and you will say so and so coin, and we'll see how those two indicators show, and I mean what they did those two indicators show for your chosen coin. So that way it will be like totally surprising and open-ended, and I wouldn't know what it is going to show, right? I don't know what you're going to ask me. So that's going to be the fun part. Okay, so now yesterday R2 had to be adjusted after some further calculation. And what I'm seeing here is, of course, this expanding pattern. Expanding pattern hasn't ended yet. So I redraw this line after seeing this price action. So this is not, this R2 change is not because of this pattern, just to clarify. It is from other method as well. So at least three methods are indicated that this is a resistance. Okay, and as you know, what happens at resistance is it there are three typical behavior. I would like to reiterate that one is it would consolidate near resistance the way it is doing, and if the strength is top class or highest, then it would blast off. It will break above and go for the next one. That's the first one. Second behavior is where it tries for some time, like what it is doing, but eventually fails and retraces. However, the retracement would not be threatening. So if you consider this is your swing low and this is your swing high, the retracement can be up to certain level, and we have prior resistance which would act like support. So this is your support in that case R1, and if this is broken, this is the support, and so on. So one has to see from the current level what is the depth of this one, right, and depth of this one, and decide what is my limit, what is my toleration, and then that's how each individual trader would decide that what is my risk management. This is the thought process. Okay, because each resistance is a checkpoint, as I mentioned. So I talked about second behavior where it retraces, and if it is, nobody knows whether it's going for scenario 1, scenario 2, or scenario 3 at the point of resistance. Okay, so I would like to clarify, no matter how good the TA is, nobody knows that. However, these are the three scenarios one has to keep in mind, that in the second scenario, as I mentioned, one has to have a plan that if it is going for second scenario, then if it retraces in that case, that how deep I'm okay to tolerate. And that should be in the plan for each and every trader. Without plan, trading doesn't work. Now, the third scenario is the extension of the second scenario, where it doesn't just retraces, but it doesn't come back to it. In second scenario, it retraces and bounce again from a support like this one or this one, right? However, in third scenario, it doesn't bounce. It may react. It may react, of course, the support, because support is where support is also checkpoint. Resistance and supports are, they flip, right? So when the price goes above resistance, the resistance becomes support, right? Simple. And if the price goes below support, the support becomes resistance. It's very known thing. Okay, but I would reiterate to just make it clear for someone who is not aware, right? So supports and resistance are different terms indicating where the price is, right? If the price is below the key level, it is called resistance. If the price is above the key level, then it is called support. So I use the term, a generic term, a key level, which includes both resistance and support, right? So this is a little bit of clarification on technical analysis point of view, terminology point of view. Right. So second scenario, you know that if it retraces and then gets support and then bounces and then prepare for the next one, next resistance on the higher end. Third scenario is an extension of second scenario where it keep on retracing, and it would bounce a little. It would always react at a key level of support. However, it may not, it will, the height of the bounce would not be good enough where it would try to break above the point of rejection, right? So in that case, it would continue going down and actually make new low, which is very subjective. What is new low? You have to think that if this is the wave, then new low will be below this. Remember. So for example, if this was the wave, this is a new low, technically speaking. But if you consider this is my starting of the wave, then new low is below this one, right? So it is very subjective to what you are tracking. So if you zoom out even further, right, you may say 2020 low, 2018 low. So there is no end to what low you're tracking. It all depends on what time frame and the wave structure you're tracking. So the definition of low is subjective to the what piece of chart or wave or price, historical price you select. So if I just focus on this piece of price action, then this is my low. If I include whole entire thing, right, then this is my low. And if I zoom out even further, then I get other low, some other low, right? So that's how it works. So it is very subjective to what all price history you include. So when I say scenario 3, it retraces. So it may make a new low with respect to this structure. It may make new low with respect to this whole entire structure, and continue going down. So that's the scenario 3. Okay. So I hope that is clear. So each resistance or key level like this is a checkpoint. Now, not financial advice, but typically trader do not add position at resistance, which I explain in trade. If you refer my video, which I posted on academia, refer it, the trade planning, so I won't repeat it, but nobody adds long positions at resistance. In fact, people short at resistance. I'm not saying one has to short. What I'm saying is, what is the best practices? Because of these three scenarios that I mentioned, where first scenario, if that happens, then one has to close it, close the position if it's shorting. So if somebody has open short and protection is somewhere higher, because it might surprise and goes up, and then so in that case, stop loss would be somewhere here in the case of short. I don't explain short because it's always the opposite than the long. That's why I don't explicitly explain short, but it is no different than long. It is just people buy at support most of the times, after when it starts rising, and people short at resistance when it shows that it is likely to go with scenario two. So it's not a good practice sometimes. Depends on how much time one has, that it hits the resistance, you go short. But probably the good method is to see whether it's going to trigger scenario two, because if it is just doing what we are seeing now, it may consolidate and go for scenario one. So shorting works when you anticipate scenario two, and scenario three, as I said, is just an extension of two. So mainly scenario one and two are important, whether price will continue from that resistance after some pause or consolidation like this, right? This is a good example, a good live example in front of us, how it behaves near resistance, right? But then one has to also think about that, is it now going for scenario two or not? If it is yes, then that's where people short. Okay, that's one of the best practices. Okay, now I think this is clear to you. So and anyone who is assuming that what a fantastic move and it is likely to break above, that's an assumption, and I don't do trading based on assumption. I cannot comment on other, but I personally don't do on assumption. I would either, I mean, you can assume, of course, you can assume that it it's when you assume, uh, you have to have a tight stop loss. For example, if you assume that it is going to go down, right? Then one has to have tight stop loss, because you're assuming, not you're not seeing that it's going down, but you assume. So it's not that you cannot assume, but the point is, assumption and seeing it is happening has difference in probability. Assumption has low probability of outcome, because you're not seeing that it's really happening, whether it's scenario one or two. So that's the fine difference between assumption and taking action based on real action, right? So nothing is wrong. Only thing is, one has to pay more attention when to get out. So if someone else is going assuming that it's going to break out, that's also an assumption, right, on the upside. Whether it's a breakdown or breakout on the upside, both are assumption. And the the so if one is assuming, the type stop loss has to be very close. That's the point. Okay, so if somebody assuming long side, then if it starts rejecting, one has to decide what is my exit point based on the risk tolerance, like that. So that's the planning part. Anyway, so come back to TA. It's a resistance. If this is broken, it goes for 31,390 as per the next resistance and then my calculation. Now, this is the ultimate one. I think this one or this one is going to be the decisive one, in my opinion. Uh, this has a pattern also and resistance, but at this moment, there is no obvious sign of weakness. Yeah, and the trigger point could be the Fed's decision, in my point of view, from economic fundamental, macroeconomic fundamental point of view. right? From a technical point of view, these levels matter a lot, right? So it could get rejected from here. There could be a spike here and there. It tries to fake out, right? And then goes down. That's a possibility, right? Or this is the ultimate one in my point of view. If it breaks about this one, then I think it becomes a strong candidate of new all-time high in my point of view. Of course, during even if it breaks up something, something we have to also always consider the macroeconomic factor playing in the role, which I mentioned that how fundamental analysis and technical analysis are different and complementary. People think that I'm FA, TA is inferior, and I say you're wrong. It's not about comparing what is superior and what is inferior. I believe, I mean, from experience, that both are important and both are complementary to each other. And how they're different, I'll tell you the what is the difference between the FA and TA is this. The FA determines the direction, but FA doesn't cannot tell you the strength and weakness. FA cannot tell you the point of rejection or point of support. It cannot tell you. This is what you get from TA. It will tell you it's looking good, but it will not tell you that this is the level where it will react. Okay, so it's bounced here. FA cannot tell you that this is a support. Where we right now I have deleted those support levels to clean up the chart, but we had the support level right on this level, right? We saw that. Now FA cannot provide that, and that's where it's important that. And when I say FA, mind you, it's not about crypto FA. Okay, crypto FA is shaky, more I would say. I'm not saying though crypto FA is useless. I wouldn't say that, but crypto FA is not reliable. What is driving the direction is not crypto FA, but macroeconomic factors, especially the interest rate from Fed, because it's all credit driven market, and cheaper credit post the high speculated assets. It's not just about crypto. Anything that is highly speculated, even there is a stock which is mostly on research based, not on a product based, that stock is also in the same category. So don't think that I'm talking about crypto being the speculative. Speculative means there is no real product which is widely used. There are products, but not widely used. So I'm choosing my words very carefully here. I'm not saying there are no products or services, but products are not being used by you and me or our parents. That's what I mean. Not like other technologies or services, like, right, other tech companies, like we use Google for their services, right? We use Apple products for our day-to-day uses. So those are being used by us. These products or services are not being used. So that's why I'm saying that there are fundamentals in crypto, but those are not determining direction. What is the real benefit of crypto fundamental? I think there's only one benefit of understanding crypto. I would say, in this is my point of view, that if you understand crypto fundamental individual coin or project or platform, what it tells you that what is the comparative advantage of that crypto to other, what is the use case which is unique in nature, what is the unique value proposition that the coin is offering, which could turn out to be a viable product in future. It tells you, if you then it maybe tokenomics, those will tell you that what is the supply and demand, and which is not so important. Sometimes it's important, but what is more important, if you study that, who is really the driver. I think that, so understanding that who is the leading the team, secondly, how they're getting the fund, Okay, because that's very important, that the continuous stream of funding is very important for any project. In fact, when we buy, we are funding them because they reserve some coins and they sell. They don't think that they don't sell, they sell because they have to spend. So there are investors who put money, like fiat money, but they also generate some cash from selling those coins when they think they're supposed to sell, right? So point is, their funding need to be understood, supply need to be understood. The main thing is the driver and the team is to be understood. Then, of course, the community to be understood. So these are fundamental aspects of crypto. However, as I'm coming back to my previous point, that these fundamentals do not drive the direction. So even though these fundamentals, crypto fundamentals are valid and important, they are not a decisive in terms of determining direction. And that's why, from a trading point of view, they are not the main drivers, but macroeconomic factors. So that's my justification and rationale behind fundamental analysis. Two types of fundamental analysis, specific to crypto and specific to macroeconomic factors, and how they are different and same time complementary to TA. So that's my take on FA and TA. Coming back to our TA stuff. Yeah, so this is resistance, which I explained. Now we'll need to see what they're doing at one day time frame. It's not going to show you anything different. The one good thing what we saw was this level is broken, right? Because this was point of rejection. This is broken. Here there was an attempt, a bad rejection, a really bad one actually, and but it survived, and because and it didn't even come close to S1. It survived and then went for higher level. Now it's again consolidating and probably preparing for breakout, but seeing is believing, right? So we'll see what it does. Now, so that's one day, which is looking good. We'll go back to our weekly chart on Bitstamp. So this is our Bitstamp on 1 week. I don't think I have changed anything except adjusted the resistance level. Nothing much. The so we were expecting this kind of a move and we got it, right? Of course, the scenario was if it would have gone down, then we had another arch which was longer. It didn't happen because it bounced. So that scenario is now ruled out for obvious reason. And this happened. Now what? So this is again a decisive point, as I mentioned. So this could continue on the upside like this, right? Or simply go down, and we'll have to see how deep it goes down. So from a scenario point of view, we can depict like this, that this is a point of decision, right? And I think this is the best way. People think about 100K, 10K. These are two extremes. And I tweeted today about that people who live in those two extremes are miserable, actually. They really miss out the opportunity of the present. The opportunity is in the present. If you are someone who is thinking of 10K, and if it keeps on going up, then it's so disappointing. And if somebody is in a group of 100K, and suppose something happens here and starts going down, then they won't be able to adjust themselves and see that it is really taking a U-turn from here, or maybe at 32K. So that's what happens when you have preconceived mindset that this is what is going to have a firm belief on something, an extreme at, then you're not able to change your mind soon enough, because you might end up changing, but it would be too late and you might end up losing the gain. because you can't believe or accept the fact if it starts going down. If you are on 100K group, that you cannot change your mindset all of a sudden, say, okay, this is what is happening. So in my opinion, those who are extreme and at extreme ends, 100K or 10K, I think they are more in worry than someone like us, who, it's not that I cannot think about 100K. It's not that I cannot think about 10K. In fact, I have depicted both the scenarios, but the probability of those levels are blurry at both the ends. Of course, it's going to go either at a 10K or 100K, right? However, present cannot predict that. And present can give information about the next resistance or next support. That's a visibility, or with visibility with higher probability. So trader has to look for higher probability, not the higher price. See the difference. If somebody is saying 100K and somebody is saying 32K with a higher probability, I'm not saying you should vote for me. What I'm saying is the person who is saying 32K has more weightage because there is a probability, higher probability. 100K, who knows? So many things could happen. You remember when it was 60K, everybody was talking about 100K. What happened? It didn't happen. So that's what, and I remember in 2018 also, they couldn't believe that it would retrace from 20K or 19K. They were talking about 50K and so on. So things that do not work like that. So those who think resistance by resistance, support by support, or at key levels, those are better off in my experience. Okay, so that's my strong opinion. Okay, so from a scenario point of view, very simple scenario. And if we talk about bullish scenario, then it touches this 31K, 32K range, retraces somewhere around 28K, let's say, and then goes up and then reacts near 48K, retraces and then goes up, and somewhere in next year or by end of the year, it would try to go near all-time high and then look for new high in next year, something like that, if you go by these projections. Of course, in between all this point of these are pivotal uh, levels where it would decide what to do next and so on. So this is not set in stone, but a bullish biased scenario. So so those who think that what could be the path, this could be the path, right? But the probability is low. The picture is blurry. Okay, this is to be noted. Okay, because mind wants clarity. Mind doesn't want short-term clarity. That's the problem with the mind, human mind. I mean, we have to deal with it. Human mind wants clarity for the far-fetched future, which is actually in practice, which is not possible. But that's a desire of mind. That's how it works. That's why there is friction. Nobody likes to see, like, with blinded eyes, like horses we see. Anyways, so and of course, if it starts going down, there are a lot of supports. You don't have to think about doomsday. But if it has to happen, then there is a huge head and shoulder which people are not talking about. Huge head and shoulder pattern is being could build, because if then it would be continuation of the pattern where this is going down, then up, and then down, and then up. And what you see is the symmetry. If I may draw this one, in this case, this is your head, and maybe somewhere here or here, depends. And then these are like tiny shoulders. And there is one more thing, is if it if you consider this whole entire thing is a head, then this becomes then this becomes your shoulder, and then that becomes this is your right shoulder. So this is a scenario in mind, and a bullish scenario is where it goes up like in this one, retraces, and then goes for 100k, 200k, whatever, right? And in the bullish scenario point of view, this is how it may pan out, which is scary, but which is it's not. Both of these paths are blurry. That's why they're with a fainted line. To also visually, these are darker, indicating high probability. These are faint lines, right? And we were expecting this one, so this is very highlighted bold line, right? But uh, right now this is faint. But if it starts retracing from here, so I would give the equal probability at this moment. I don't want to, yeah, equal probability. Both are dashed line, equal probability, because it hasn't decided. Make sense? So this is Bitcoin, and what we should celebrate, I would say that it has broken about the box. So definitely, it's a good news for the bulls. Definitely, no doubt about it. Okay, right. But let's see, Mr. Powell, what he does next week, because as I said, TA do not determine the direction. FA, macroeconomic FA, determine the direction. TA provides the key levels. If it is exhausted, it indicates. If it is both side out on uptrend or downtrend, it will indicate. So these from education point of view, and also from expectations setting point of view, it's important that one understands that TAs are not do not know the future. Okay, this is my experience. TA do not know the future, but they know the scenarios with probability, and that's how it works. Okay, now what? I think I covered Bitcoin. We should cover, in my point of view, you will the behavior I'm seeing right now is alts are green. Most of the alts are green. The reason is because BTC is green. If BTC starts going down, they'll all of a sudden turn red in a big way. Okay, so only caution is um, make sure you have risk management, because BTC hasn't decided yet. And as I mentioned, I won't repeat, if somebody is assuming, then one has to have risk management plan, because if scenario 2 occurs, then one has to be ready. Okay, if scenario 1 occurs, well and good, where it goes up and makes new high. So that's it on Bitcoin, I would say. What I'll do, I'm going to